Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
This week on Wall Street Wrap-Up, Southwest Airlines resumes normal airline flights today after thousands of flights canceled, and stranding many in airports for their Christmas, New Year's plans. And the year ended for all the indexes down, worst year for stocks since 2008, and for Disney, the worst since 1974. I'm Andre Laborde. We've got these stories and more on this last day of trading for 2022. Now that Christmas is over, the only thing left is to pay the credit card bills coming due. It's Friday, and that means it's time for Wall Street Wrap-Up. Hi, I'm Andre Laborde. Welcome to Wall Street Wrap-Up on this last Friday of 2022. Well, so this was the last day of trading for the week, for the month, and for the year. But first, coming up, we had such a great response a couple of weeks ago with our discussion with former presidential candidate and Texas Congressman Dr. Ron Paul. We brought him back again. Dr. Ron Paul coming up. But first, how did the stock market do? Well, all the stock indexes ended the year in the red, with the tech-heavy NASDAQ getting hit the worst, down over 33% for the year. The Dow Jones was the dog with the least amount of fleas, down just under 9% for this year. And why did the Dow do better than, say, the S&P 500 or the tech-driven NASDAQ? Well, because those value names of the Dow. You had oil, just as like Chevron was up highest at 52% for the year, or Merck was up 44%. Caterpillar was up 15%. And this year will go down as the fourth worst year for the S&P 500 since 1945. Now, as you can see, the worst was the 2008 financial crisis, down over 38%. In 1974, we were down almost 30% for the year. And now, 2022, the S&P ended the year down 19.5%. Well, energy sector was the best performing sector, up 57% for 2022. Now, the losers are those that may just as well be said for all of them, except for energy. The biggest sector losers for the year are the communication services, down 40% for the year. Consumer discretionary was down 37%. Now, these are companies that sell non-essential goods such as appliances, cars, entertainment, lodging, or media. Real estate was down 28%, and technology, they ended the year down 28%. And now for the winners. The only winning sector this year was energy. Occidental Petroleum gained over 115%, and second was Hess Oil at almost 90% for the year. And Marathon and ExxonMobil both rising over 80% for the year. Normally, the year following an up year, the sector that did well usually follows through again and continues into the following year. Now, if there was a down year, as this year, 2022 was, well, the worst performing sectors from the prior year, this year, normally tend to outperform. So how do we predict 2023? Well, the government continues to spend, and President Biden today just signed a massive $1.7 trillion omnibus spending bill to keep the government running. But Congress still hasn't shelled out all the money in the last Inflation Reduction Act a couple of months ago. Now, what is going to happen with Ukraine's invasion of Russia? The Federal Reserve. And what about those unforeseen circumstances, which are known as the black swans that may be lurking for next year? Well, how did the markets do? Disney had its worst year since 1974, and the S&P had its worst year since 2008. The best sector was the energy sector, and this week, the Dow Jones ended at 33,147. And the S&P 500, they ended at 3839, and that was down 0.12% for the week. And the NASDAQ, they ended today at 10,466, which was down 0.25% for the week. The year, the number one sector was the energy, rising 57% for the year. But what about next year for oil? Well, on the bear side of oil and gas, if a recession does come, as many are predicting, an economic slowdown could hurt energy demand. Plus, energy has been the top sector for the second straight year, and according to data, no sector has led for more than 2 years in a row. Now, on the positive side for energy for next year, with WTI at $80 a barrel, earnings will continue to be upbeat, and energy companies are continuing to focus on returning free cash flow through dividends. Well, this year, the S&P has dropped over 1%, a total of 6 times throughout this year of 2022. But the most times for the last 70 years, since 1952 to 2022, was in 2018. Now, during that year, the S&P 500 dropped at least 1% or more. In 2018, 8 times. That year followed by 7 times in 2008. Well, let's get to our guest tonight. We had Dr. Ron Paul a couple of weeks ago and got lots of great response, so we thought we'd bring him back again. Hi, Dr. Paul. Welcome back to Wall Street Wrap-Up.
Andre, it's great to be with you.
The Federal Reserve has been raising interest rates continuously, 75 basis points for numerous times of meetings. And now going into 2023, I mean, we're in December, but going into 2023, what do you think the Fed should do?
Well, they should just go out of business. They should just leave it alone.
And to be perfectly blunt.
Fixing the interest rates is the real problem we have with the whole economy, because it's price fixing of the most important price in an economy. Because if you're getting a lot of information, at least in a free market, the information comes from the interest rates. It tells savers what to do, what spenders have to do, the investors have to do. All these things are decided by a lot of people deciding what interest rates should be. So it's all a gimmick. But the question is usually, yes, but what do you think they should do and how long are they going to do it? Well, they're going to monkey around for a long time, and they're not going to solve their problems because they have no idea what the interest rate should be. I happen to have an idea, and from my own viewpoint, is that if we had market rates of interest, my guess is that interest rates would have to be a lot higher. A little better conversation ought to be, what will the Congress do on spending?
Right now, with interest rates the way they are, what they call the terminal rate, which is the rate that they'll finally end at, nobody knows who it is. And like you said, I don't think they know of what's going on. But you were in Congress at the time when Paul Volcker was the Federal Reserve. In fact, I know I've watched you many times. You've even had private meetings with, at the time, Chairman Volcker. I mean, he had to raise rates in 1980, 81 and such. I mean, he had to raise rates so high that just strangled the economy to lower those interest rates. Do you think that, you say politically, and I agree with you, I know the legislature, Congress is so runs by politics every 2 years. Do you think they're going to have to keep going higher until they finally start reducing that inflation?
Yes, they're going to go higher, but you don't know if the Federal Reserve and the Congress will buy into it and let it happen. I don't think they will. It's going to happen, but it'll come more because the market is demanding it, because the markets are demanding that there is a correction. They inflate, they get the bubbles going and the inflation going, and the market says, no, you have to. The market would like to see interest rates high enough to slow up the economy and correct the problem. But yeah, they went up to 21% under Volcker, and in a way, it gave us a reprieve, and it was a tremendous time. The 70s, that's what motivated me to go into politics, was really the ability to understand monetary policy before 1971, because I became fascinated with that on the Bretton Woods artificially gold standard. But in 71, the world went off gold completely and totally. And I said, it's ushering in a bad age, in that age of inflation and the calamity that we're facing now, and all the spending that's happening. It's never happened before to have a single fiat currency that becomes the boss. But it will come to an end because the markets don't like that, and the political system doesn't like it. So eventually that's going to end, and that's why there's so much fussing and fuming going on. I think that is reflected in our political arguments because they won't talk about what's really going on. It's the bankruptcy of the country. It's the destruction of the currency. That's what's wrong. And we have a moral bankruptcy as well. But when a country goes broke, it doesn't want to liquidate it. So they will never pay off the debt. But the debt will be liquidated, and that's what's happening right now. We're liquidating the debt because the real debt is going down at the rate of 10% a year or more, because they don't tell you what the inflation rate is, the price inflation rate. So that's what they're doing. They have to liquidate the debt, and it's going to be prolonged because they don't allow the market to operate.
Well, Dr. Paul, right now, I mean, as we speak, our national debt is over 31 trillion, and by the time this interview ends, it's going to be maybe even closer to 32 trillion. But I mean, we used to both think about our children and our grandchildren and we'll be paying off the debt. But have we all resigned the fact that they'll never pay off this debt? All we can hope for is probably the economy to grow bigger to be able to keep up with this increment debt?
But the debt's going down because if you can print enough money and push prices way up, the real debt shrinks. So if you have a $31 trillion debt and you double the supply of money, this is just for instance, the real debt is only 15 trillion. Because we've diluted the debt. But it's wicked because it causes so much trouble. People benefit and people suffer. And then they print more money and the rich get the money first, so they benefit from this. So the debt will be liquidated, and then you can start talking about rebuilding again. Right now, we have borrowed so much money, like you mentioned, the $31 trillion. We borrowed that money, and now we're raising interest rates, so we have to pay the interest on all that money we borrowed, but it's not in the process of correcting things because what we're doing, we have to borrow the money to pay the interest on the money we borrowed. That's why there's going to be a lot more political chaos because the people, they will not, it's like a drug addiction. The person on drugs, they don't very often volunteer to come in and say, oh, yeah, I want to quit. Tell me what I have to do. But when you quit printing the money, it's very painful. But the market will make the systems quit working because the debt has to be liquidated. We can't afford it anymore, and that's why they keep taxing the people. People have to realize that when prices go up, that's a tax. I don't like to talk about inflation, the CPI going up 10%. I don't like that because it's misleading, and it's done on purpose so that you don't think about the problem, the Federal Reserve. It's going up because the Federal Reserve printed so much money. Well, why did they print money? Because we have an empire to take care of. We have to build these weapons, and we have a welfare state, and we run the world. And who wants to give that up? But the market's going to work, and it'll be liquidated, and we have to decide as a country on whether or not we want to go toward a freer market than we have today.
Well, Dr. Paul, I think it was Milton Friedman, the economist, who one time said inflation is a tax that Congress doesn't have to vote on. And you spent 36 years in Congress. I mean, you probably know a lot of the players that are right now in Congress by first name basis. I mean, the ability to tax and to spend money is such a great power that they'll just go ahead and kick that can down the road. I mean, do you see any kind of adults in the room to say we have to start cleaning up our own mess and not let the next guy do it?
Yeah, there's, I think, 5 people in Washington.
You can count on one hand, but you don't have to need the second hand, right?
And there may be 5 that understand it, but they're not going to put themselves out there and say, I'm cutting spending. So you'd have to cut spending. And,
they're not going to do it. You may cut spending at the Paul household or the Laborde household, but cutting spending at the in Congress is an anathema for Congress.
Yeah, but it has to be paid paid for, and that's what inflation is. And Friedman is absolutely right. It is a tax. So when I tell people when they go in and all of a sudden they say, "Oh, eggs are twice as much as they were before." Well, that's a tax on there. It's not that the chickens quit laying eggs when they come up short like they do for wartime conditions or COVID war, that kind of stuff. They just print money. And it's not, and the other thing that people do not want to admit, especially depending on which side they come, but they don't want to admit that both parties are guilty. And the people, to a large degree, are guilty too, because but out of ignorance most of the time, because of the propaganda and what they've been taught, they don't realize how important it is to understand monetary policy, because they are the taxers. And there's a misunderstanding. So there's a lot of responsibility that goes around. And I blame the universities especially. And that's why I praise Austrian economics, because they believe in sound money. And I've emphasized the point that the restraint, the founders knew all about it because they had the runaway inflation of the continental dollar. So they said nothing other than gold and silver can be used as money. And yet we didn't follow that very long. But the big separation of that and the destruction of the currency was August 15th, 1971. That is when we threw in the towel and said, we're dishonest. We told you that the money was backed by something. It isn't. Just our promises. We'll print it when you need it.
Well, Dr. Paul, I think that was a Sunday. That was a Sunday when Richard Nixon came on the air and said about the gold. I think there were more people that were upset that he interrupted Bonanza and about the Cartwrights on the Ponderosa. Now, I know you know who I'm talking about, but there are people that were born after that were going, who are the Cartwrights and what's the Ponderosa and what's the Bonanza? But they were more upset because Hoss Cartwright was interrupted than the fact that they were taken off the gold standard at that time in August of 71.
Yes, you have information there that most people don't have, so keep at it. Keep passing out that
Well, I'll tell you, I have a confession. I have a confession.
If they don't understand.
We always have like a little trivia, a financial trivia. And last August, on that date, we had the time that it was on. And it was on during Bonanza, and the calls that NBC got that were so furious that Richard Nixon interrupted Bonanza. I have to be honest, I wasn't watching Bonanza, or maybe I was watching Bonanza, I don't know. But the only reason I know it was because of the fact that we had that as a trivia question last August. They're talking right now about, Congress raises the debt ceiling and continuously raising. Well, now they're even discussing having an automatic raising of the debt ceiling so that they don't have to vote on it. How dangerous would this be?
Well, it just compounds everything we're concerned about today. The problems in the economy, the inflation, high interest rates, and all these things. It just gets much worse. That's all. But it does start with the spending. I don't think people they always raise it because they're very bipartisan. Everybody gets together. So they talk about elections and major changes and all this, but they all believe in the Federal Reserve. They all believe in deficit financing. They all believe that the welfare state is a good idea. They all believe that we have an empire to defend, and so they're not going to buck it. It's all political stunt. They do a lot of arguing and everything, but you can list about 5 things there that both parties endorsed. So how much talk did you hear in this past election about why does that Ron Paul, what's he think? He thinks they should audit the Federal Reserve.
Yeah. Well, you have in the Paul household, I know like in my house, we have budgets we have to work on. And when you were in Congress, you came up with a budget. I mean, the word budget has been so far since removed from Congress because they're now just raising the debt ceiling because nobody wants to do a budget because you can't balance the budget because there's just so much more spending than there is income coming in. So if you're giving an automatic debt ceiling raise, that's like putting a bottle of alcohol a table with a bunch of people that are addicted to the stuff and saying, have at it.
I think we lost this debate that we're having right now at the time they were writing the Constitution, because Hamilton said you have to be able to borrow money, but Jefferson said, no, we shouldn't be able to borrow any money whatsoever. We should have gold and silver. But Jefferson lost that argument, so they were able to borrow money. And then they eventually just whittled away at the restraints that this monetary system was supposed to place on us. I mean, even during the Civil War period, they suspended the gold standard and went back to gold. And it's just been going on and on. So I think that I think they knew about it even at the time of the founding of the country, but the dramatic event was in 1971. So that has to be addressed. But nobody wants to do that, because that means you have to curtail the expenditures. But it's not, you keep thinking about people getting food stamps and the poor people can't pay their rent. And there's a lot of sympathy and empathy for these people. But the whole thing is the real welfare beneficiaries is the military-industrial complex, the pharmaceutical industry. They're horrible. And they made, just think how many bucks they made with passing out a vaccine that I personally considered not a good idea. Prices always go up faster than you can get your wages up, and that's why you have political crises, and that's the direction we're moving in.
We're talking, if you're just joining us, so happy to have Dr. Ron Paul. Been in Congress for 36 years, and after he was also a former U.S. presidential candidate. Well, don't go away. We're going to take a break and be right back. Welcome back. We're glad to have Dr. Ron Paul with us. In 1971, Richard Nixon took us off the gold standard, and they even during the Civil War, Abraham Lincoln took us off the gold standard, but he brought us back onto it. Do you think it's probably, I would say nothing is impossible, but it's highly improbable that we'd ever go back to a gold standard?
Not with a very big radical change in our whole system. We'd have to give up the welfare warfare state. So that's not going to happen. People understood a lot more that you had to live within your means. So. And they had a 3-year transition period, and the people went through that, and they started withdrawing their greenbacks. They shrunk the money supply on purpose, and all of a sudden the price of gold had been up to show there had been the monetary inflation. And during that 3-year period, the price came back down to $20 an ounce, back to the gold standard. So it stayed on there until we had the Federal Reserve come in and start playing mischief on it. And that, of course, led to the Bretton Woods Agreement, which was a real disaster.
I would assume, too, that they would have such strong pushback from Wall Street, because after it was taken, the dollars were taken off the gold standard, then you started having currency fluctuations where Wall Street traders would trade the U.S. dollar against, well, at the time, it was the franc, the Deutschmark, now it's the euro, or the Japanese yen, the peso, all these fluctuations that today, that there's a lot of money to be made on Wall Street with it because of the fluctuations.
Yes, they like that, because before the Bretton Woods broke down, they didn't have these futures markets in currencies that changed every minute, and people making on daily trades on this. That's many $1 trillion worth of exchanges that go on. So. They would probably object, because it would just be disruptive. They wouldn't probably think the big picture, but it would be disruptive to them having adapted to this. To them, it would be rather boring if your dollar maintained its its value, and you didn't have to guess at what it is.
Dr. Paul, what is your feelings, your thoughts? Today, you have cryptocurrency, and there's a segment of this country that swear by it, Bitcoin and others. Just recently, FTX, a crypto exchange, just went under because of regulatory problems and using money that they didn't have. Do you think cryptocurrency should be in use? Do you think it should be regulated by the Treasury?
Historically, if you look at maybe 6,000 years of history, at least 5,000 years of history, gold and silver was picked by the people because it was a natural thing to do. And I don't happen to be attractive to the fiat currencies, the cryptocurrencies. I don't understand it. I don't like how it works, and I like to see the stuff and hold it. So I personally don't have much desire, but I get along very well with people who like crypto because I want to defend liberty and I want freedom of choice. And I don't want the government involved. I think too many crypto people want the government involved and have regulation. But the market will regulate it and decide. And when you see days and weeks this past year, Bitcoin went from 68,000 down to 16,000. So it's something that somebody has to decide that. But I want it to be decided by the people, and I don't like the government regulating it. And then if it's going to be a good substitute for money, so be it. But no fraud. Some of those exchanges sound a little bit like a banking system that the crypto people advertise. We don't want to deal with the banking system. But guess who does know and understand the exchanges? And that's the IRS.
Yeah. Well, that opens up a whole new can of worms because I haven't even gotten to you about the 86,000 new agents that they're about to be hiring. Oh. Dr. Paul, unfortunately, my clock doesn't stop. Would you come back? Because I want to start back up now with the IRS and your thoughts on that, too. I hope you come back.
Yes, I sure will.
Thank you, Doctor. Well, if you've got a question or comment about the show, we would love to hear from you. Make it pithy, make it concise, and write us at Andre@WallStreetWrapUp.info. And now for a look ahead of market info for next week. But first, who was born on this day in 1800 that invented a way to vulcanize rubber, making it durable to be used on the roads? We've got the answer in just a moment. Well, who was born on this day in 1800 that invented a way to vulcanize rubber, making it durable to be used on the roads? Charles Goodyear. But he didn't patent his invention, and he died a pauper in 1860. Died without a penny. Well, coming up next week, for the first week of 2023, we're going to be talking with the senior markets correspondent on the New York Stock Exchange, Bob Pisani. Now, Bob's been covering from the floor of the New York Stock Exchange for CNBC for a quarter of a century, and he's seen it all. Well, he's written a great book. It's called Shut Up and Keep Talking. Sometimes a lot of the most interesting things are not covered on the air. Well, how traditions have changed on the NYSE. How does he invest his money? Maybe some of the celebrities that he's met that while they were ringing the opening bell of the exchange. We're going to be talking all about that to CNBC's Bob Pisani next week to start off 2023. And as a reminder, we repeat the show Sunday mornings. Best way, though, set your DVR so you'll never miss an episode. And that's our show for the last Friday of 2022. I hope you enjoyed it. My thanks so much to Dr. Ron Paul for joining us this evening. But as always, it's you we appreciate for allowing us into your homes tonight. So remember, you can always follow us on all the social media on Facebook and YouTube, Twitter, and WYES.org. So have a happy new year, a productive start of 2023. I'll see you next week and next year. Remember, if it's Friday, it's Wall Street Wrap-Up. I'm Andre Laborde. Remember, money never sleeps, and Happy New Year. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.